So required is the group statement of cash flow. Group statement of cash flow. Oh, yeah. Will this be okay? Yes. So the group statement of cash flow in accordance with the IS number 7, they did not specify the format to be used. So I'll start with indirect, then we repeat using the direct method. So when they don't specify whichever method a student applies is okay. So write for me there. So as we read, we can post what we get along the way. So the name is Maneno Group. So right there, Maneno Group. Maneno Group. Consolidated statement of cash flow. For the year ended when? Charles, mute yourself. Charles. Shillings again. Charles, mute yourself. Online, come on, Charles. Troublesome. So we'll start with operating activities. So we always start with profit before tax. So profit before tax. Profit before tax. How much? Check from the P&L. Profit before tax is 699. So give us 699. Then adjust for. So today for the first time, so I want you to check. No, whatever is 7. Can you try to proceed? Do the ones you can, go to the notes, all that. Just try out, then I will join. Try that out.
No, me actually. Can come.
But there was just up. Those of school. They said something, see, they said something, they got some pressure to come in.
Really good online. Hiyo watu wamesonga songa, sio? Lakini hizo zingine wamesonga. So wacha ni sasa ni join from the additional information, sio? So and just for of course depreciation hata kama tunaiona. Depreciation. So not one. Depreciation is 240. Note 2, an item of PP with the carrying amount of this was disposed for this. The loss on disposal is cost of sale. Loss on disposal should not be there. It is not an operating expense. So you take 85 minus 7 what? 50. So we lost how much? 135.
135.
We lost 135. You add back. No. Number 3. Number 3.
The reason why I was capturing
Mhm.
because what we are doing is property. Now, property is anything to do with selling one of the traders.
So Waliuza,
Yes.
and they lost. Loss on disposal, they have captured it.
Because it is affecting.
Yes, it's affecting the profit because the loss on disposal actually now they are classified at the cost of what? Sales. So it means before PBT, they had already subtracted that loss. And loss is not an operating what? Expense. So you add back. Number 3. So you add. So you create a cost of sales, it means it was recognized as an expense. Yes. On 1st of August 2017, the group disposed of an 80% owned subsidiary for shillings how much? 1170 million in cash. The subsidiary had the following net assets, no problem. The subsidiary had been acquired in 2012 for a cash of 660, when its net assets had a fair value of 675. A non-controlling interest had a fair value of 150. So at that stage, I want us to check impairment. We reconcile goodwill. You start with the goodwill on acquisition, subtract goodwill in that subsidiary, then you compare. So let's have a working for impairment loss. There is someone using the name administrator there. For class, use your name administrator. Administrator. So goodwill, balance brought down. So can you check the balance at the start? Yes. Goodwill at the beginning was 390. 390. Then the subsidiary, there is this subsidiary we are selling. You need to check how much was the goodwill in that subsidiary. So subsidiary, check net assets minus purchase consideration minus the net assets acquired. So in that note before note 4, they said the subsidiary had been acquired for a cash payment of 660. NCI also stated at their fair value. Sure. Fair value of NCI in that note was 150. So you add 150. Then you subtract the net assets. Net assets on that date of acquisition was 675. How much is the goodwill? 135. So this one left because it was disposal. So you subtract. So we should be reporting how much? 390 minus the 135. 255. Skip one line. You check the balance carried down. So carried down as per the examiner there. How much is the carried down? 255.
Yes.
So we have done zero work. So I'm going to report administrator. You will log in administrator. You will log in administrator. Oh, did you mention a kapotia the So there was no impairment. There is no impairment. There is no impairment. So at least to I go to a big just in case. So impairment loss. If any, come and report to the letter at this stage. You are back. There was no impairment. We have reconciled goodwill account. We started with that, then subsidiary which is being disposed at this goodwill. So it is telling off. Next. Let's continue reading. Continue reading. Now we are in note 4. Additional PP was acquired by way of lease. No problem. 5, dividends paid by the holding company. Dividends will go to financing. Ignore. Land was revalued upwards. Revaluation will affect PPE. So nothing. So the last phase of adjustment is you going back to profit account. You go back to the profit account from where we have revenue. This is revenue, this is PBT. So you play around here. Items which were captured in this space, but they are non-operation. Operations, you will only allow cost of sales, admin, revenue itself, selling and what? Distribution. So any other expense which was subtracted prior to PBT, add them back. Any income which was added before PBT, subtract them. So we can start from revenue up to PBT, or we move from PBT going back. Let's start from PBT for uniformity to Kipanda June. So from profit before tax, going backwards, which item are you seeing? Finance cost. They have done what? Subtracted. So you add back 450. Unajua wanaiwekanga in a way that unaweza fikiria waliongeza. If you check what they are doing, they have taken distribution, admin, finance cost, then wamesukuma ile side ingine. So they added, generally they have added. They have subtracted, I mean. So you add it back. Next, climbing up, administrative tick, that is okay. Distribution is an operating expense, that is fine. Next, share of profit after tax in associate, that is not an operating income. You subtract. So associates profit, how much is this? 144, you less. Gain on sale of subsidiary is not an operating income, subtract. Gain on sale of subsidiary, that is not an operating income. You also less. Cost of sales is okay. Revenue is okay. That is how we do the adjustment. As simple as that. So give us here cash flow before what happens? Before working capital does what? Changes. So how much? From 699. From 699. You are getting 1260. So Charity, kwani hiyo kamera yetu inaangalia wapi? She's on the board. This is 1260. Charity says focus the camera on the board. Online, it is focusing where? Because according to me, it's focusing on. Where's the camera focusing on? Anybody online? Are you seeing the board? Because Charity is saying the camera is not focusing on the board. It are not forecast. Oh, now it is forecast. So good. So I want you people to give me working capital. I don't want to mention anything in regards to working capital. So I want the working capital. So allow me not to mention anything on the working capital. I just want the answer for the working capital.
And the white. Si un algoritmo consegue por ahí on the road.
Ziko tatu. So give me the answers. Inventory, you have recorded an increase or a decrease? Increase of how much? 900. Anybody not getting 900? Online, anyone who is not having 900? So increase in inventories. It increased to how much? 39, eh?
Yes.
They had opened with
That's
3090, then they disposed 90. So that is an increase of 900. You subtract. And then receivables, you got an increase or decrease? Increase of how much?
185.
Eh? I'm not familiar with that answer. 135. Eh? What is my 85 or 35? Receivables. So increase in receivables. Receivables increase to 3120.
Tulianza na 3120.
Yes.
Tukanini disposal tukaenda na 135. Sasa ambaye 185.
Tumefunga na capital, tumefunga na
170.
Oh, that's the mistake. Kuna pepa zingine ni 3120, 3120. Zingine ni 3170, 3120.
Hapa ni 3170.
Hebu anataka answers kama itakuletea the same answer. Ukiwa na 70. It's typing error in some papers. It should be 3120, 3120. But confirm with your additions. Or no other the variation. So what will I answer for standby? Mbona iko shida? Ndio. 3120, 3120 rekebisha. It should be 3120, 3120. So 3120, 3120. They disposed how much? 135, eh?
Yes.
So the increase is 135. Payables, there was no problem. Payables, you got increase or decrease? Increase. Increase of how much? 1710. So increase in payables. It increased to how much? 20? 55. Initially, 85. Eh? We disposed 17. That one we add. So can you adjust from 1260? Adjust from 1260. Then we get cash generated from operations. Cash generated from operations. Cash generated from operations you are getting? From 1260.
1935.
Leo hii kalenda yako. Oh, you have exchange. Tax paid. Tax paid nyinyi mnanipatia. Kindly work out. Tax paid. Online you can throw me the answers. You can make reference to what we have been doing. Make reference to what we have been doing in the how we have been calculating tax in the other questions. Check how we have been calculating tax in the other questions. Apply it here. Mshapa. Niko na present hapa. Oh, you had attempted before.
I stand with the answer.
So wacha tusikie watu wanapata nini. Kila mtu afanye, fanya hata kama utakosea the best. Kukosea leo si makosa, kukosea 1st of August is the problem. So nataka ukosea ndio uone hiyo kitu inakufanya unakoseanga. Ndio hiyo siku tusikosee. So can you tell me how much is tax? Online you can throw me the answers. Else bulione ni nilipata. Sitasema. I'll keep it to me. Because tax payment is cash out. We get a positive with that. Yes, unarudi fellowship ya bracket. Tax paid. Paid, anything paid doesn't get a bracket. Sio tumerekebisha.
Tarehe moja.
So, how much is tax paid? Anybody online? Anyone online with the tax paid? Just say what you are getting. It's not a big issue. Alice Mugenya, I want to see your answer. Charity, Christine, Collins, I want to see your answers. Dennis, where's your answer? Divina, Elizabeth, Emily, we want answers for tax. Jen wamejificha huko online, they don't want to give me tax. Lenny, we want answers here. Madenge, hakuna kuandika answer na Kiswahili. We want the answer in English. Keep 2, we need answers here. Lucy, Nora, we need answers. We need the answer for tax paid. Hata kama ni mbaya. We need those answers so that you will know where you went wrong. Ruth, we need the answers here. The Ruths. So I can see 3 from Alice, Madenge 414, Esther 3. Madenge, your variance is very big from others. Naona watu wakichezea 3, so 414 must be on a higher side. Unapata ngapi? Yes, the correct answer should be 3, not 33. Lucy ama umetype 3 mara mbili. Kama upata 33 toa moja, baki na 3 moja. So tax is 3. Eh? Tax is 3. So let's work it. Uone mali haujaona so that next time will be good. So taxation, you start by saying balance brought down. Balance brought down, be very keen to check the 2 of them. Eh? Yes. Both? Yes, deferred and current, the 2 of them. So deferred is how much? 915. And current 63. Yes. So total 978. So that was the tax obligation at the start. Deferred current. During the year, taxman charged us another tax. So check your P&L. In the P&L, we were charged income tax. What? How much? 144. You add. Subsidiary left us. Subsidiary left us with the tax. What? How much? 15. They went with 15. And that's all. Sure. So when you adjust this, how much do you get? 1107. Skip a line there. The examiner is saying obligation at the end is 1020 plus 84, giving you 1104. Decrease in obligation is payment. So tax paid, how much? 3. So kila mtu ameona kwenye alikuwa anakosea. Madenge, you have used 555 instead of 144. Be very keen, eh? Sounds okay. So the good thing, everyone has seen where the problem is. There's a group who are forgetting about the P&L. There are those people who are forgetting about deferred tax. That one has been captured. Therefore, this minus this is how much? 1932. Call it A. Call it A. Then we go to investing. Investing, check how we have been doing the other questions before we start. Investing, we concentrate majorly on the non-current what? Assets. So to end up on non-current assets. We concentrate on non-current assets. So non-current assets, as you can see from top, the first one we have what? Property, plant, and equipment. Two things. Two things are which ones? Cash received on what? Disposal. Disposal of what? PPE. And then you'll also be required to bring cash paid. Paid to do what? To acquire. To acquire PPE. Those two. Mostly, they will give you one of these. One of these will be given. Then you must prepare PPE account to determine the other one. They gave us this one. The cash received on disposal of PPE. Which note? 2. Check note 2. An item of property with a carrying value of this was disposed of during the year for how much? 750. Cash inflow. We disposed and we received 750. So to get this other one, make sure you prepare PP account. So let's prepare PP account. Let's prepare PP account. So have PP account. Balance broke down, PP at the beginning. 13. Good. Now you go to note 1. We bring anything touching on PP, you bring them accordingly. From note 1 to the last note, then we compare with the closing. Very easy. So let's go to note 1. Note 1, there was depreciation. You less. So less depreciation. Depreciation, they have said how much? 40. Sure. Note 2, disposal. Less disposal. Disposal, make sure you dispose at the book value. Book value is how much? 885. Sure. Note 3, subsidiary was disposed. Subsidiary, they went with PPE. What, how much? Subsidiary went with 20, 25. Sure. Note 4, additional PP by way of lease. Lease sometimes lease is more or less of the liver badai. So the lease was how much? 900. Top up. Dividends. No, land was revalued upwards by how much? Revaluation was again 60. So can you add all this? Then we compare with the closing. If we get an increase means they acquired. How much when you adjust? 11, 3 times. Keep alive. According to examiner there, the balance carried down is how much? 18. So it has increased. Increase means they acquired. So your balancing figure here is acquisitions. How much is the balancing figure? The increase? 6690. So else you got that? Alright, so that's okay. So 6690, that is cash outflow. That is a cash outflow. Lakini uliweka bracket. Ndio unaweza pata kwa workings na ukileta kuweke positive hakuna kitu. Ni bracket. Sawa. So there's no problem. Hata utaweka bracket before compute.
Yeah.
We'll let it release here for that. The next item under non-current assets, we have what? Goodwill tulimalizana kwa impairment. Ignore. Last is investment in associate. What do we assess? Dividends. So associate is a company we just sit home, then we wait for dividends. So you come here and say dividends. It's very easy. Dividends from where? From associates. Dividends from associates. This is how it is done. How much was our investment when we started the year? So check the balance at the beginning. 422. Then investment should not remain constant. During the year, so it was 420 when we started, but during the year, check P&L. How much profit did we get from the associate company? Check P&L. Share of profit after tax in associate. We got how much? 144. It means our investment in the associate company should be 420 plus 144. Sure. Yes. 420 plus 144. We should be talking about how much? 5? That's 64.
Yes.
However, decrease. Sometimes dividends are paid out of investment. So the decrease we will assume, it decreased to how much? It reduced to 510. 510 is the closing. So it's always simple. Beginning, during, compare. Even you can be able to know because it should not be an increase. You can't increase. So if you're not going to increase in our for the year. How much is this? 15? 4. Then once you are done with the non-current assets, check 2 items. 2. 1, investment income. Investment income, though it is not here, if investment income was there, definitely ungekuwa umetoa kwa operations. During adjustment unaitoa because it's not an operating income. Ungekuwa umetoa, but you add it back here because it's part of investing activities. And finally, deal with subsidiary now. Subsidiary is either acquired or disposed. So like in this case, it was disposed. When you dispose, you are receiving cash. So you say net cash on disposal, subsidiary. So when you dispose subsidiary, the word net, we use the word net because you find you dispose, they paid you, but we pia kuna cash yako ilienda. Mnakumbuka hiyo story yetu? So we disposed it for how much? Not number 3, yeah? Yeah, not 3. The group disposed of an own subsidiary for 1170 million in cash. So we received 1170. Kuna cash yetu pia tuliacha huko.
Yes.
We left there 10. We add we less. 1170 minus 105. Tulipokea 1170 na tukawapea cash pia ya 105 kama kupewa change. You get 1065. And that is how we are done with investing. It ends there. The way I know you people, is this something serious? In your own assessment, walete cash flow ama wasilete? Hizi kwa mingi, si tumefanya swali ya last sitting na last sitting part 1. That is the current reasoning of examiner. Itakuja hiyo style.
Waweke vitu vingi.
Working capital iko na shida gani?
No, waweke vitu vingi na tukue na fix mingi.
Ni mbaya ama ni mzuri? No. Working capital is the easiest. And I therefore declare that everybody here must get working capital.
Yes.
Because si unaangalia opening, then subsidiary inakuja, but now it depends. Was it disposed or it was acquired? If it was acquired, just take opening plus. Then uangalie kama ni increase ama decrease. If it is disposed, opening minus. Then unaangalia. So I'm saying on working capital, for example, inventory. Actually, all of them, you start with the opening balance. The opening, opening, go to the subsidiary. So subsidiary depends on disposed or acquired. So if it's acquired, you add. So you take opening plus. Then the answer you get, una compare na closing. So
The other one is the opposite.
The other one is just the opposite. So where people go wrong, kidogo, but not people from Alliance, wanna subtract subsidiary from closing. That is very dangerous because disposal or acquisition is before closing. So it should affect the opening. So you start with the opening If it's acquisition, add to the opening. The answer you get is what you compare with the closing. Nego. Madenke working capital is the easiest. Amesema hiyo ni ataanza nayo. Lakini umeshika. Hiyo lazima tupate sisi wote. Hii working capital.
Where there is no challenge
and investing what?
Serious. Given only one.
Yes, this one.
So the one that you are given no problem. The one to calculate.
Sasa hiyo ingine. Hiyo ingine unakuwa unanyenyekea tu unaanza na brought down, then you go to the notes. You don't now concentrate with this one. Note one unasoma unaona depreciation, we add or we less. Hivyo tu.
And then again, because you say yes, you can avoid working as much as possible.
Yes.
You know the reason why I miss taxation. Me, I try not to open the account, try to subtract the so I was supposing the system come up with something to come up with the tax paid. Because there are some items so taxation I can say calculation of some and in the interest of time as much as possible.
Sawa, nimekusikia. Niongee vibaya. Kenye imeshinda mtu alliance hakuna mtu atapata. So ukiona kitu imekuletea issue.
Lakini I can see
what is disturbing you is disturbing the entire country. So why are you struggling? Ukiona PP iko na shida, kwanza kwenye inakuwa na shida, what I know will bring problem. Unaona hii? This one and this.
yes.
Revaluation, this question was good walituambia. Sometimes they don't say. Wanaificha huko kwa equity. So you run to equity, then you check the difference. You remember there's a question tuliona on that station. Na lakini si ndio ushajua inafichwangwa huko. So lease.
Ama sasa zingine they give you direct like
Yes. They kama hawana beef na wewe watakupea direct. Which one? Very common. Very. No, this is why I'm saying people can forget to adjust. Mtu anaweza sema they acquire through lease so they pay. No. Lease, when you enter into lease, payment will come later sometimes in most cases. So the asset value goes up, but there is no money which has been paid. Yes.
so when you lease a property, it's treated as you are starting so you have captured money.
Sure, yes.
Note number 5. I was supposed to handle that.
The challenge, ngoja kidogo, Alice, the challenge is the part before working capital. Alice hapo sasa unatudanganya. Alice anasema sasa yeye shida yake kuweka hiyo profit before tax ni ngumu. Alice anasema yeye shida yake inatokea tu hapa. Ati hapa.
The one that is more complex is how to come up with that impairment to access.
Impairment peke yake. Alice, here you should get almost everything. Except the way they are saying maybe just impairment. The rest are easy. Profit before tax, hiyo ni kazi ya macho. Depreciation umepewa. Loss on this. You know what you need to know here is that you add back non-operating expenses. So it means you need to know which are the operating expenses. You know? Yes. Once you know the operating, these three, the rest you add back. Then for income, the one you don't subtract is which one? Revenue. So all other income unaona ilikuwa hapo kwa profit account, you subtract because they are not operating. So that is the easiest. That part is very easy. Actually, for operating, that impairment is the issue, and maybe tax. The rest you should get. Scoop maximum takes. Note number 5. Dividends. Iko na shida gani? Hebu soma mwenye tuliandika. Soma notes. Just read the notes. Read for me. Note number 5. we said something. There is something we said NB. Ama however. So nimeipata. Hebu soma. Kwa sauti.
Dividends and interest received and paid may be classified as operating investing or financing cash flows provided that they are classified consistently from period to period.
Yes, interest and dividends, they can be taken anywhere. You can bring them under operating, even investing and financing. In practice, once you select, a company has decided to classify them in either of the three, we observe consistency. In cash name, you can place them anywhere because you're not considered. You place them anywhere. But for me and others, we feel dividends should go to financing. The reason being, who are we paying dividends? The shareholders. Who are the main financials here? Even interest. Interest, because I can loan are part of financing. So these are auto. But nobody will mark you wrong if you bring them. You can bring dividends and interest out of your tax. But ideally, they should be part of financing. So I couldn't do that mark wrong. Let's proceed. So this one came to how much?
48.21.
Negative. Negative 48.21. Call it B. Just look at negative.
Yeah.
Financing. Financing activities. B, I want those people with challenges. Kwa hiyo challenge yako ya working capital, tuko sawa? Alice, your challenge before working capital, are we okay? Confess. We go to equity and liabilities. Financing. Alice is now very okay. That is very good. Financing, we go to equity and liabilities. So tunateremka hapo kwa equity, we do the necessary, mpaka liabilities mwisho. So under equity, are you seeing ordinary share capital? Combine ordinary share capital with the sister, the share premium. In almost all the questions I've ever done, today on a redemption, in a issue of shares. So cash on issue of what? Of shares. How will you know that these people issued shares? Increase. When you see an increase, that one means they issued. And they don't issue for free or for stones, for cash. So check beginning. Beginning, you add ordinary plus share premium. 45 plus 0 is 45. 6 plus 9 is 69. So you increase. Increase of how much?
24.
24. So you take 6 plus 9 minus 45 plus 0. So I'm told this is 24. That is cash inflow. Gilbert, shida iko wapi? The only challenge inakujanga hapo kwa shares, which I need to tell you after Gilbert ameshaona, because if I whether advance kama hiyo adawa. Umeiona? Are you sure? Na hii hata tutaona. Haya, sasa the only challenge here, unapata wanakuambia in additional information about the subsidiary. The subsidiary was acquired by issue of what? Shares. Hiyo tu. Subsidiary was acquired through issue of shares. So you start this way, opening ordinary plus opening premium plus the shares they issued to acquire the subsidiary. Then it is now when you compare with, sorry, see, in the opening, yes, you take opening ordinary plus opening premium plus the ones they gave to acquire the subsidiary. Then you compare with the closing. So when they say they used shares to acquire, then kindly check top them up there when you want to know the issue of shares. Correct. Yes, inaenda pamoja na opening. The ones which were issued, you want them as part of opening because it was issued before closing. So it goes together with the opening. Then you compare with the closing. But if there's nothing like that, like this one here, you go direct. Opening, closing, cushion. Let's go to the next item. Next is revaluation. Under equity, revaluation, we say there is no money you get. Sure. Yes, so ignore. Retained profit. Retained profit, you're supposed to use it to get what? Dividends paid to the members of the parent. Members of the parent. And how do you do it? You take the opening retained earnings, you add profit for the year attributable to the parent, then you subtract what? Closing. But in some questions like this one, you find the examiner shakupea. Wakikupea, it means wale realize. Ukifanya hiyo swali ka balance. So wana fix hapo. So when you are given the dividends by examiner, pick whatever you have been given. If not given, take the retained earnings at the beginning, add attributable to the parent in the P&L, which even we have. Not attributable to the parent. So it is opening plus what is attributable to the parent minus what? Closing. Retained earnings. That decrease will be dividends. But once they realize it will not, their question will not balance, wataki stress, wanakupea, wanakuambia parent were paid this. So in this question, we were told, if you are told don't reconcile, just pick whatever they have said. Dividends paid by the holding company during the year is how much? 120. Why should you disturb yourself when they have decided? So you say dividends, parent, 120, cash outflow. You will not pay parent, now watch NCI, they will bring problems. So you also check NCI. So for MCI, we were not given. So do the same, the way I've told you for retained earnings, but now you check the NCI. So go back to equity. The last item under equity is what? Shareholders, funds attributable to non-controlling interest. So let's have a working outside there for MCI. Let's have a working outside there for NCI. For NCI. So for NCI, how much was the equity attributable to NCI when we started the year? 525. Give us there. For the year, you go to P&L because that was at the start. So during the year, that is P&L. Minority were given how much? It's always the last. Are you seeing attributable to price makers? 75. So the one students do forget, which I really don't want you to forget, is which one? Subsidiaries. So kuna subsidiary inauzwa. You check what was their interest in that company and which now is being done what? Disposed. If the subsidiary is being acquired, also you check. That subsidiary being acquired is coming with the net assets. You check the net assets. Net assets coming worth how much? So less subsidiary. Subsidiary. So subsidiary is being disposed. Hey, how about you? 175 nimekuwa shida. Na wewe pia hujaona. Uko na highlighter ya yellow. Mchore. Sawa, tuendelee. Yes, the subsidiary is going out. Yes, we are supposed to be acquiring, we just add. Yes. So if we were acquiring the subsidiary, you check the net assets of the subsidiary, then you multiply by the percentage of minority. Because you are disposing, you check what was the net assets of minority on the date of when the subsidiary was acquired. Then this subsidiary made how much from the date of acquisition up to the date of disposal. Inaenda hivi. Check that note, the small note before note 4. The small note before note 4. The subsidiary had been acquired in 2012 for cash of 660, no problem. When the net assets had a value of how much? 675. By that time, the net assets were 675. By the time we are disposing off, their net assets is how much? So 1200. Hiyo iko hapo juu. Are you seeing the 12? Yes. So when they were acquired, the total net asset was 675. By the time they are being disposed, their net assets has gone to 12. So the increase from 675 to 12, NCI will get their what? Their share. Then the non-controlling interest had a fair value of how much? 150. So minority on the date of when the subsidiary was being acquired, their value was 150. Then the subsidiary made this difference. They made this difference after acquisition. Minority will take 20% of what came after. So, yes, after acquisition, they made 12 minus this. The net asset, there was increase in the fair value of net assets. Give minority 20% up to what they were having on the date of acquisition. Sometimes it is not fair, they don't have fair value. If there is no fair value, take whatever they made after acquisition, give minority their share. How much? 255. So this is 255. Being disposed. So NCI should talk of that. NCI should talk of that. You get 345. Example amesema ni ngapi at the end? 225. That decrease, the decrease is dividends they were paying. So decrease of how much? 120. Unaona vile wabaya. Wamejifix mpaka wamelipwa the same na parent. So wanaenda wakiwhistle. We don't joke with them. 120. They have also been paid 120. Nani ako na swali? The 1200 is coming from where? Can't trace it. Ah, madenge. Madenge, those are small things. Eh? Where is you unajibiwa hapo na nani? Elizabeth. Net assets at the time of disposal, correct? Angalia juu. Collins anakuambia angalia juu. Si juu ya ceiling kwenye umekaa. Shaona. So correct. Let's continue. Let's continue. Equity is over. Let's go to liabilities. Equity is over. Let's go to liabilities. So to liabilities, we have what? Bank loans. Loans, two things. Either you paid the loan or you acquired more loan. So we check. We started with a loan of how much? 3,000. So it's fine. 3,000. Did we dispose the subsidiary with some loans? Check. Everything you do, you must remember subsidiaries. Yes. So it is 3 minus 6. So we should close with 24. But the examiner said we closed with a loan of how much? 42. So what happened? We acquired, we paid. We acquired more loan. So loan acquisition. Loan acquisition. 42 minus 3 minus 6. How much? 18. We add with less. Yeah. Kuna mwingine aliniambia but ni loan tuna subtract, hapana. You check in terms of loanability, not in terms of cashability. You check in terms of cashability, no? Yes, you check it in terms of cashability, not loanability. You know, you check it in loan, unaona liability. So you check the cash inflow. Ama ukipata loan, si unafurahia? Imagine umeenda so mfika kwa matatu, kumbe ulisahau pasi yako hapa na iko na fare. Ukifika kwa gari hauna fare. Na ulikuwa unaongea na simu na ulikuwa unaongea Kizungu. Unajua we don't expect someone talking in English in matatu now haizi lipa fare. Ukienda kwa simu kuangalia ulipe na M-Pesa 0.8. Ukiangalia fuliza limit 3,000. Si unakopa unamwambia I can even pay for other neighbors. So you become happy at that moment. Guess baadaye. Haya, next. Obligation under finance what? Finance lease. Anything on lease in cash flow. Inakuwa tu lease repayment. Where are they got lease repayment? I'll show you. Lease repayment. Lease repayment. What is the issue? Umesema huyo ni Charles. Charles, kwani umekosea watu nini? Lease repayment. So lease repayment, our working outside, you say obligation under finance lease. Obligation under finance lease. So obligation under finance lease, say balance brought down. How much was the lease obligation at the start? Lease zote, ukipata lease kwa swali zinakuanga mbili. There is the short term and the long term. So combine them. Check lease under non-current and current. Because lease kuna yenye inalipwa in the next 1 year, ingine itakuwa current forward because of the amortization issue. So obligation under finance lease, long term is 130 what? And the short term under current, 30, yeah? Yes, that is 30. Please check to confirm all those figures. Check the. Okay, lease, you know, lease, mostly lease in another long term, but to another to kilipa. So the one which will be paid in the next 1 year in a current. So when you have lease obligation in the balance sheet, anybody with a lease in the balance sheet, you should have two of them. You should have the non-current and current. So I don't want you even to reason in that line of what you should know, lease in a bill. Anybody with a lease must have non-current and current. So just the way we are doing deferred and current. So take the long term and the short term. So the long term is the one under non-current assets, which is 135. Current is 30, giving us 165. During the year, I don't know, there's a note someone was saying. During the year, there is PP which came with note 4. Yeah, note 4. Additional PP was acquired by way of lease. How much? It means the total obligation, lease obligation should be that. How much?
1065.
1060. Skip a line. Carry down according to examiner. 630 plus 45. You get 675. Yeah. Decrease in obligation is always payment. So paid, that decrease. They paid 390. They paid 390. Na wataki kusema. Peleka huko juu. 390. Good. Next. We are almost done. Deferred tax tulimalizana. Payables tulimalizana. Current tax tulimalizana. Obligation done. The only thing remaining is accrued what? Interest. So andika hivi, interest paid, the finance cost, interest paid, interest paid, interest paid. So interest paid, how much was that? You know, accrued. Accrued means not yet paid. So at the beginning, these people are not paid interest worth how much? They are not paid 27. During the year, they were charged how much interest in the P&L. So P&L, you check finance cost. Finance cost, do you category like interest? So check finance cost in the P&L. It was 400 and what? 50. So top up. So this is finance cost. So this plus this. So if we get the same figure at the end, then it means they paid nothing. However, check the closing. Accrued interest at the end is how much? 21. They paid the difference. They paid how much? They paid 4? They paid 456. Pusha, financing done. So can you give me the aggregate for financing? Kusema tu kweli, kuna mtu anaweza kwa hiyo mtendo upate cash flow, alafu out of 20 umepata tu at 0.3/20 from here. Kumi ni kidogo.
Nilipata yote.
Ulimaliza yote? Umejua aje hujamaliza?
Kuna kama total squad kwenye process. Kwa tax. But this is the
Now that is before revision.
yes.
You have not even revised anything. If you can get 10 before revision, you can get a revision. Another 10. So financing comes to how much? Why are people hesitant? Well, kuna venye watu wanakuangalia, ina maana suggesting that 31. Hata online naona ni 31.14. So please check 3114. Positive. Call it C. Therefore, najua labda ameacha 24. Akaanzia hapo. Therefore, net cash flow, take A plus B plus C. Take A plus B plus C. You get to 255.
Yes.
So you get 255. Then you say cash and cash equivalents.
225.
Oh, 225.
Yes.
225. Cash and cash equivalents brought down. You get cash and cash equivalents carried down. Assuming award itatoka kwa hii class, wale wanakujanga physical na online sasa tugani. In fact, hii mambo online sasa nyingine mimi sioni kufurahisha. Ukiwa online unafaa ukuje kwanza tujuane. You know, sometimes I can go somewhere without knowing huyu mtu anakuanga online. Anakujua na wewe umjui. So watu wanafaa wakuje hapa. So assuming a word datoka hapa, what will be your identification? Watu watakuwa nasema aje? Charles, watu watakuwa na kuidentify aje? Ama Charles ni Charles tu. Na kama ni ule alikuwa anakaa huko nyuma. Ati mwenye alikuwa anaongea sana. Na kama ni Madenge, uja mwa Kiswahili. Okay. Gilbert, kama ni wewe, what would they say? Ati Gilbert ni uswali mingi. And finally he has made it. Na kama ni mimi. Alikuwa nakuja late kidogo saa zingine. Na kama ni Magena alikuwa nakuja saa zingine physical na saa zingine anapotea. Oh, ati ule working capital. You see how people can give you names. Elizabeth anauza na watu wa online. Atume picha. Atume picha watu wamtambue. Right for me here, cash and cash equivalent. People should know each other. Cash and cash equivalent. Yeah, you know it is very important because kuna ibu zingine si mzuri. Kuna mwalimu alikuwa anatupigia story, alipanda matatu. Fare ikiwa 80. Then on the way fare ikaenda 100, akaanza kucomplain. Akasikia hapo nyuma, mwalimu tulia nitakulipia. You see now those problems. Basi mwalimu angejua kuna student hapo nyuma, hata angeleta shida, hata angesema keep change. So online you are hereby someone. You are being someone to appear here physically once. 2017, 2016. Can you go back to your notes? Read for me. I want you to read for me how we define cash and cash equivalents. What was the definition? How did we define cash and cash equivalents? Cash and cash equivalents. Na kama uko na neighbor, kama kuna mtu neighbor hapa, chukua namba ya mtu kaange nayo, hata kama muongeanga. Siku moja utashtuka after 3 years, unaona anaongea kwa TV. Alafu naambia watu my classmate. Unataka kumpigia simu na una namba. Ati wacha nipige muone akiwa disturbed kidogo kwa TV. Chukua namba ya Gilbert. Hebu tusome cash equivalent. Cash in hand and demand deposits. Short-term and highly liquid what? Investments. Wacha tu hapo. So when we talk of cash and cash equivalents, we are talking of cash in hand, cash at bank, liquid investment if to come financial assets. Those are traded in the stock market. Those are liquid investments. Then bank overdraft, but bank overdraft is a negative cash equivalent. So check our question keenly. When you check our question keenly under current assets, go to current assets. In current assets, financial assets at fair value. Unaiona? That is a cash equivalent. So andika hapa financial assets at fair value. That is a cash equivalent. What it is doing there. So how much is this? 135 and 30. Then cash and bank. There is cash and bank. Cash and bank 510, 390. Then bank overdraft. Apparently, there was no bank overdraft. If at all it is there, you subtract. Some of you will have taken that, and that is why I brought it before you take, so that you should know. That is why I looked for the question. So brought down is how much? 420. So weka 420 hapa. Then 135 plus this 645. It is tally when you have this and this, will you tally with the closing? Correct. That's it. Wow. Hivyo. Swali ni gani? Madenge, what is the issue? Madenge amesema mtumie all your phone numbers. The disposed? Yes. The one which was disposed. Sio tulishaweka huko kupata net. Unauliza hii 105. Hiyo maneno yake tulimaliza. Haiko kwa at the end. Si atende nilipata kama tumedispose. In fact, other bank overdraft. Sometimes utapata bank overdraft as part of the net assets disposed. Uzilete huko kwa bank overdraft ya mwisho. Inakuanga factor here. So at the end of the year it is not there because it was disposed in within. Sawa. Is that okay? Andika hapo chini, repeat using direct method. Direct. Repeat using direct method. Another letter kwa mtihani, this time round, we dictate. For the last two consecutive, they'll be dictating in direct. So they can give you a question, then they say, using direct method. What will happen? Start saying, oh, no, CC, I'm not direct. Sasa wana vijana wanataka kumtaika. Wani after 1 year watakuwa wamekusahau. Ati utaona sasa nakifanya alikuwa anaitwa huyu alikuwa anakaa mbele. Alikuwa anaitwa nani? Andika hapo maneno group. Ani amekuwa cabinet secretary. Consolidated statement of cash flow. So we are direct. So allow me to, okay. For direct and indirect, they only differ. They only differ in operations. So I'm only repeating operations. The rest are the same, whichever method you choose. So we are only doing operations only. So allow me to lay down the format, then we can fill in. So right now, operating activities. Operating activities. Cash received from who? Received from customers. Then cash paid to employees. Employees and who? Suppliers. So what you will get, so if you will subtract, this one you will subtract, you get cash generated. Generated from where? From operations. Then tax paid. Tax paid is the same, whichever method you choose, it was 3. Any tens there, what you get here, you call it A. So like this question, they never specify the format to use. A student could select whichever method you use. You see like this other one, the A was 1932. That 1932, whoever uses this method should also get 1932 there. Yes, they should be the same. Honestly, watu wanafurahia hii direct inakaa nyepesi. Because none of those information will be there. Unaona watu wanafanya tax, hata kwa FA, I think hizo vitu zimekuwa. Kuna hii kitu tunafanya taxation, kuna kitu inaitwa sini back duty. Iko na incomplete information, So ni kama you work backwards, utafute hizo so many things. So they will hide a lot of information. So if they don't specify, please go for indirect. Hii unakuja tu kama wamesema, so kila mtu ako hapo. Sawa Charles? So tuanze. Collins anauliza kuna marks ya kuandika heading. Hakuna. But you have to write to tell people what you are doing. Hakuna. Marks is on the entries. Entries. Direct. Very complex. Especially hapo kwa cash pay to suppliers. Hapo ndio roho inasimama hapo kwa suppliers. Basi ngumu. Definitely yes. Tukifanya cash flow kwa direct, walimu wetu waliongeaga vibaya. Nasijai waliambia wasichana that I think it was relating with this. He said this short forms, you know, in shortcut, inakaa kadogo. So alikuwa anaambia ladies, don't fall in love with these short men. They are highly tempered. So these short formats, they are highly. No, sisi tulikuwa tall by that time. So, but nothing is hard. What you want, it is something workable. The only problem with this one here, unapata kama, how many entries? Can you count for me entries in that cash flow tumefanya mpaka mwisho, mpaka cash and cash equivalents? How many entries are there? Unafika kama ngapi? 20. Elizabeth. Atimukiana CPA inakuanga na maga kuna 20, sindio? There are 20. So 20, it means 1 for 1. 1 for 1. So can you check for me entries in operating mpaka tax paid? Not the totals, the entries mpaka tax paid. Mpaka tax paid. In operating activities. 10, Yes, so if it is 10, then this 3, 1, 2, 3 must be 10. Yes, they must be 10. So most probably this one will be 1. This one remaining 9. This one I can give 1, 2, 3, 4. Then this one I can give 1, 2, 3, 4, 5. So it means if you get this one entry correct, you have 5. Ukikosea tu hivi 5 imeenda.
Isikuje direct.
Hata zinaweza kufungulia sahi. They have. Wameuliza. Wamedictate mara mingi. Use direct. Haya, wacha sasa tuseme kitu mzuri ya kukonsole watu, But you should not do that. Wakisema direct na hukuona, wewe ukanyorosha indirect. Watakumark X only on the operations, but they will mark investing, not total. Investing and financing. Because investing and financing are the same, whichever method you use. So operations itakuwa X yote. So hautatoka bure. Utakuwa mpunguza, si ndio? Haya, wacha tu watu uzuri wakileta direct. Kila mtu wako hapa, hakuna mtu anapenda direct. But wacha uone. Hakuna. Hakuna. Wacha nikwambie reports. Ndio kwenye kasi level wanakuwa na chuki na advanced level. Wanaona huyu ni mtu anaenda. Unashikwa miguu. Unaponyokanga at your own struggle. Watakangi hiyo story. So you have to be very keen. But wacha uone Himalayas watapata this one. What one rice is in. Andika hapo cash received from customers. Makena they are never dictated. You can even show you those questions. But me like wakileta hiyo, everybody is there. Kila mtu wako hapo. So wakiona watu wameanguka sana hiyo, so wanasema utalipata 10 ticks tuseme 20. So cash received from customers, andika hapo chini. Prepare and reconcile. Tunaandika prepare and reconcile. Prepare and reconcile. Prepare and reconcile. Trade receivables account. Prepare and reconcile trade receivables account as follows. Trade receivables account as follows. So there we go. I think I'm watching receivables. Receivables account. Receivables account. Even balance brought down. How much was the balance brought down? Receivables. Check receivables. Receivables 3120. 3120. Receivables are debtors. So top up credit sales. So add credit sales. So credit sales, we assume, yes, we assume that revenue, the entire revenue was on what? Credit. But if they dictate in exam, the direct method, watakuambia, they can tell you revenue is this, then they tell you 80% of revenue was on what? Credit. Or one take a revenue in bracket credit sales. But in this one, because the question was open, we are going to assume that entire revenue was on credit. So take revenue. So credit sales is represented by revenue at 3075. So this balance brought down, top up your credit sales, subsidiary left us. So less subsidiary. Subsidiary left with how much? Okay. Where is subsidiary? 135. So subsidiary left with 135. How much was it supposed to be? Check what the balance ought to have been. Then we compare with the closing. The decrease is what we received from customers. How much? 6060.
Yes.
6060. Skip one line. According to examiner, that is not the value of receivables. He's saying receivables is how much? 3120. So receivables went down. Decrease in debtors means debtors have done what? Have paid. So the decrease is the amount received. So receipts from customers, how much? The decrease. 29? 40. So you do not up. So you make it boom. If subsidiary was acquired, you add instead of disposal. Okay, let's see what happened. Atiata ni nyepesi. Okay, so let's proceed. Andika hapo chini. Cash paid to employees. Andika hiyo. Cash paid to employees. Right? Cash paid to employees. Cash paid to employees. Cash paid to employees. Then you say Consider, tunaandika, consider the sum. Consider the sum. Consider the sum of administrative. The sum of administrative and distribution. Administrative and distribution costs. Administrative and distribution costs. Net of NET, net of non-cash, expenses, such as depreciation and impairment, So to get what went to employees, add those administrative expenses. So right here, cash to employees. Employees, you come and add administrative, admin costs, distribution. Distribution mostly, but fine. Admin and distribution, how much? Check your P&L. We have 480 and 240. 480 and 240, giving us 67, like that. Yes, giving us 720. Then there's something deep I have to say about that. There are some expenses hauzioni kwa profit account na ziko. Expenses and even income. You can't see them in the P&L, but in the notes they are appearing. If you can't see them in the P&L, it means they were classified inside either administrative, distribution, and cost of what? Sales. So which are these expenses? You cannot see them in the P&L, but in the notes they are there. So depreciation is one of them. Kwani waliweka wapi? We assume maybe it is part of what? Administrative. Ama kwa cost of sales, whichever. So just subtract, whether you subtract the TR cost of sales, there's no problem. Because the employees and suppliers will be one figure. So you say less non-cash expenses, depreciation, impairment. We cannot see them in the P&L. It means they are here. We want the actual cash. We did what? We paid. So if they classified some expenses there, get them out. Depreciation was towards 240. Impairment was not there. The other one, which I could have subtracted, but I will not, is loss on disposal. Because examiner dictate, check note 2. The last bit of note 2. The loss on disposal is part of cost of what? Sales. But hata ukitoa hapa itakuwa na problem, because cost of sales will also be considered when checking suppliers. But let's comply. So right there, impairment. No, I think depreciation stroke impairment. Though impairment was not there. If there was gain on disposal, you add back because they had used it to reduce the expense. So ndio kama walikwambia gain on disposal iliwekwa hapo ndani, si ilikuwa imepunguza expense because an income. So you add it back. Question. So how much is this? How much did we pay our employees? How much did we pay employees? 480. We paid employees 480. Please leave it hanging. Leave it hanging there. We suppose we want employees and suppliers. So I want us to go and shop for suppliers. So write down there, cash paid to suppliers. Cash paid to suppliers, you write and say, prepare trade payables account. Prepare trade payables account. As follows. Prepare trade payables account as follows. As follows. So this way. So you say trade payables. How much was the balance brought down? Check the balance brought down. 17. Be there. Are you there? Aye. So balance brought down was that. Then subsidiary left us. Subsidiary left us with the payables was how much? Check where? Subsidiary went with 540. Then during the year, we started with the payables of this much. You will earn what we call credit what? Credit purchases. So hiyo ndio watupatiani. But God will work in different ways. So hiyo wachana nayo. We will get this sum. Then that sum you will compare with the closing balance. So balance carried down. Payables carried down is how much? 29.55. When you compare this and this, you will find a decrease. That decrease is the cash to suppliers. That balancing figure. That decrease. So what we are being denied, and what makes students now wachukiange hiyo direct need, but it's very easy. Credit purchases, and I've never seen any question they are providing. So to get the credit purchases, use this formula. How do you get cost of sales? Opening stock plus minus, use that formula. So we are going to assume that the purchases will get all of them on what? Credit. So we have also tried. So let's substitute. We have all these items. Can we check them there? Cost of sales. How much was cost of sales from P&L? 14. However, they say that there was loss on disposal in the work happen. So no, your tower. There is loss on disposal. Here we are checking cash in, cash out. Loss on disposal, I remember it was 130 what? 135. Loss on disposal in note number 2. Check note 2, just in case you forgot. An item of PP with a carrying value of 885 was disposed for 750. The loss, so take 885 minus 750. You get 135. So that is the correct value for cost of sales. Is equals to opening stock. So can you check the opening inventories? Check the opening inventories. Opening inventory was 30.90 minus disposed. We disposed how much of inventory? We disposed 90 plus P minus closing inventory 3,900. Using your mathematical what? Can you give me the value of P? Give me the value of P. Obey board mass at any given point. Obey board mass. Board mass must be obeyed. Who is giving us the value of P? 22? 35?
Yes.
Okay, people are saying P is 22, 35. So if P is 22, 35, rudisha huku juu. So we assume that P was all on credit. So you bring here 22, 35. 22, 35. So I'm waiting for this one here, the balancing figure, what was paid. I'm waiting for what was paid. Huh? What was paid? Eh? So paid, I'm told, is 525. 525. So total, andika hapo chini, total paid, total will be employees was 480. You know, we need to combine the two. Employees we got 480. So you take 480 plus 525. Okay, tuko sawa? Good. How much is the total? 1005. So I'm told this is 1005. So what 1005 peleka pale kwa cash paid to employees and suppliers. Employees and suppliers 1005. What is 2940 minus 1005? 19 minus 3. 1932. You have to get yourself. Kama examiner haja dictate, bado iko sawa kabisa. Is it bad? Imagine it's not bad. At least nirudishe kamera hapo. So payables brought down, less subsidiary, credit purchases we don't have, carried down we have. To get purchases, use the formula cost of sales is opening stock plus purchases minus the closing stock. Cost of sales, they say there was loss on disposal, so we have subtracted. Opening stock we have minus the subsidiary. Eh? Subsidiary disposed, if it was acquisition, you add plus P minus the closing. So you get P, issue of sale is 2235, work hapo, so pay this, then combine with the employees. So at least utapitia pole pole. So that is okay. But then ukiangalia vizuri, if you try it frequently, it is not hard. Usome ukweli. Eh? When we were doing exam, cash flow was there. Now it was open. Mimi nilitumia direct method. Direct. Na lakini cash flow haiku balance, lakini nilitumia direct method. So unaweza ipanga tu vizuri, lakini mimi I prefer this one. Hapa utapata tax mingi akina working capital, eh?
Yes.
Add back depreciation. But if they dictate, no problem. So write for me there, down there, end of group accounts. That is the end of groups. Your group imeisha sasa. That is the end of group accounts. Then after that, so unaandika end of groups. Then now you write there, last topic. IS number 36. Impairment. Impairment of assets. Impairment of assets, where we even cover the IPSAS. Impairment of assets. Other hiyo tutabembeleza, hiyo ni last one, eh? Tutakuwa na hiyo. So tomorrow we are meeting for EPS. Remember EPS we had started for the combined classes. So Mr. Afula is not around. That one means early morning I want a class. So we can meet us early, 8:30. hapo mbele. Alafu hiyo wiki ingine tumalizie EPS. During the week tupumzike na impairment. Sure. Sawa. So make sure umerevise vizuri.
Stop recording. Don't post recording. I want to tell them how to make them.
Nimwambie Dr.
CHS.
Umeshafanya NCI? Impairment. Let's come for those 3 classes. Monday, Tuesday, and Saturday. Yo, Sunday again.
So Sunday is the last class.
Sunday is the last class on 24th. After that, you will not see me in class again. About your reality takuhit. Sawa, so Sawa, I will send. So I pause when you end whatever you are doing. You will just end. Okay.